Welcome back to U.S. Farm Report on the Roundtables. With me this week, I have Mike Florez of Florez Trading and Craig VanDyke of Top Third. All right, I think Friday was a perfect example of how volatile these markets are right now. I mean, we were down, up, a roller coaster ride just in one day. Why so much volatility right now, Mike?
It's funds trading algorithms. They hit the market with big numbers either way, and it creates kind of a vacuum in the market. So the more often that occurs, the more people back away from it, and so the liquidity is not as it once was. That's just a function of the markets anymore. That's what we live with, and it's not just soybeans or corn. It's across the spectrum. So it's just volatility is here to stay. Yeah,
but that volatility, it seems like, hey, the funds are wanting to get in. At least that gives us some hope, right, that they're still into play and possibly we could move higher. So do you see it as an opportunity?
Well, absolutely volatility. With volatility comes opportunity. You know, the funds do play a role, but I think similarly, I mean, you know, the USDA kind of set a precedence back in March that, you know, we start to see some slight shifts in yield on the soybean crop moving forward. Now we're right in the heart of potential weather markets or weather forecasting for soybean production. Either shift in yield here in soybeans draws a much wider variance in what we're actually going to have and what carryouts are going to be and what supply and demand is going to be moving forward. So those small, minute adjustments are going to play a role on the volatility in the soybean market, and we're seeing that as forecast change, and that piles on top of it with less liquidity, overnight markets, and ultimately the funds moving things around.
What is this forecast telling us right now, Mike? I mean, you know, it doesn't look like we're going to have this 2012 drought, but at the same time, we hear of possible dryness in places. What are you?
Right. Well, you got the big heat dome out there sitting there. So, you know, for what I've done personally, I'm long calls. I want to have exposure to the upside. I might be wrong on that Sunday night, but I want to have exposure to it because if it comes to pass, and I think it probably will, then you could, you know, 1 or 2 bushels off the yield. Well, you're talking to carryout's gone. It's amazing. We've gone from 2 months ago, record supply, burdensome supply. 2 months later, now we're talking maybe potential shortage. So the markets can change so quickly. So, but I think you need exposure on the long side right now. If the dome goes away, then hey, it's a different ballgame. You know, so you take your losses and move on.
Craig, the WASDE report this week sparked some favorable price action in like the corn market. Why was that?
You know, I think majority of the numbers this week were actually about in line. There wasn't anything too surprising except one of the bigger numbers. And some of that information I think was confirmed before the USDA confirmed it. But the reduction in Brazil's 15-16 corn production, to me, is what stands out the most. Now we saw CONAB come out about a week prior with similar estimates, and the USDA adjusted for that. Now we're looking at, you know, a recent article here today coming from Mato Grosso area. Shortage of corn supplies. We're seeing Brazil say we're going to have less poultry, less pork production moving forward because tighter corn supplies. So to me, the biggest number there is what's going on in South America. You know, the drought has been down there. It has not been up here like we've been trying to push for the past 4 or 5 months. The drought down there is playing a bigger role, and I'd agree with Mike here. I think, you know, what markets have done in such a short amount of time, I do like a little long exposure as well, especially we're trading this range here and how quickly we've broken off in corn. I think there's absolute opportunity to the upside for the moment.
Mike, last week, both of our analysts said they think corn was priced too low. So after this week's market action, do you think corn is still priced too low?
If you get a lot of rain and the weather situation the next 2 weeks doesn't come to pass, then it's probably got, you know, 30 cents down in it or something like that, but I don't think a lot. The vulnerability more would probably be soybeans, but you know, one thing that you got to remember is that all these stocks that we have in the world that has been the bearish factor, half of the world stocks of corn and wheat are held in China, and those stocks are 3 years old, 4 years old. They're very old, so they've lost their value to a certain degree. I really think that you're going to probably see a lot of imports coming back, you know, from everywhere from China. So the stocks are burdensome, but you got to look at the numbers and say, how burdensome are they really? So, and I don't think they're so burdensome. So you have potential of a lot more demand coming to the U.S. market.
You do, but is that demand enough to push prices higher?
Depends on currency valuations, depends on how big this wheat crop is and how much is that going to hold down corn. You know, you look at the real strength moving forward here, I think there's potential for demand to move prices higher from here.
All right, well, when we come back, we're going to talk wheat, cotton, cattle. We'll cover it all next on U.S. Farm Report.